Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again at the gold market. So yesterday you can see slightly stronger inflation numbers. Gold has triggered downside action, so I'll take off the table any concerns about possible upward continuation, at least in today's session. So our risks that we discussed yesterday about the possible bullish dynamic pressure hasn't been confirmed by the market. So from that standpoint, this is really great because now we could turn our attention to particular patterns that might be the fruits of this recent drop. But right in the beginning, I would like to say that the performance on the gold market stands so tricky that any minor action in one or other direction could change significantly the trend that we could get on the next week. And here's even starting from the daily chart. Let's take a look. That market right now is flirting with the MACD indicator. So if we will get today close above the MACD, we will get the bullish grabber. That automatically suggests the taking out of this top, turning daily time frame context into bullish once again, and suggest upward action supposedly to our nearest target, but maybe even to more extended targets, because what will happen already on next week nobody could predict. This is the first tricky moment that already stands. The side-by-side trick comes from the payrolls today, because ADP numbers were 2 times better, almost 2 times better than expected. This, as you understand, although the correlation in recent few years between the ADP and payrolls decreased, but still it's a turn advantage in favor of the better payrolls report, right? So that in turn makes a direct impact on the daily picture as well, because if we will get better payrolls together with a slightly better inflation yesterday, what could happen? Right, so downside action could accelerate on the daily chart and grabber might not be formed. This in turn leads us to idea on the follow time frame chart, which potentially might be the hand and shoulders. So we have the butterfly, very often becomes part of the hand shoulders, and if the scenario that we have just discussed will be materialized, so we get better numbers on the payrolls data, we get straight downside action right to the 27.15 area, where this potential neckline stands. But this is not all yet. The 27.15 is the first daily 30% support, and on the daily chart this thrust looks really great. So other words speaking, this is the point where we could get the first trade, the bread butter buy. And that seems very reasonable because the result of the bread butter will be the right arm of the hand shoulders pattern. So retracement might be somewhere back to the 27.50, 27.55. So this is $40 potential on our first trade. But this is not all yet. With this most recent thrusting action that we discussed, we actually also have bread and butter trade. Yes, it is not as attractive. It is seems suspicious, just because we get really very fast downside action here, and psychologically it's not comfortable to consider taking a long position based on this collapse. But nevertheless, from the theoretical point of view, this is also bread and butter. We have 3 closing below 3 by 3 after this thrust, and market hits 618 support. So here's how it looks like on the daily chart. So where the 50% support, 618 support and 2740. Its target is 2767. Minimum target 618 pullback. But at the same time, this shape is not quite friendly to hand and shoulders, right? So you will see on the slope of the head some deep retracement back to the 618, it's not really very good shape will be, and it doesn't correspond to idea of the stronger parallels, right? So now you just could imagine the overall mess that stands around the current situation on particular trades to trade. So if you're a conservative trader, I would recommend do nothing and wait for clarity with our major setup, which stands right here. Particular as with the hand and shoulders, as for the daily bread and butter. So you need just to wait whether we will get clear shape around 27.15. If we will get it, that will be the first point where we'll consider taking the long position. Probably it should happen next week. If you're ready to take more risk, including some gambling on the payrolls numbers, because this is just the probability game, chances on the weaker payrolls also exist. So you could consider also this kind of the bread and butter, although currently it's already on the halfway to the target. So you could decide about this, whether it makes sense to take the long position here or not. Personally, I'm not really fascinating with this current setup and have some uncomfortable feeling for taking a long position with it. But this is very personal, and you could watch it in a different way. You could see it in a different way. So, but potentially it could work, and that's actually the target will be of this passion as well. So as you can see, gold market right now provides a lot of different setups thanks to this most recent drop. And this will be really very interesting what will happen on payrolls report. As a bottom line, in 2 words, our major trading stop for now, as market has confirmed this downside action, we will be watching for this patch, hand and shoulders, and potential bread and butter on the daily. So other steps that we just have discussed, this is up to you. So would you like to do this or not?